Okay, so let's talk about the housing industry. Try to go quicker. Okay, so we talked about the housing market tied very close to the local job market. We may still see a decline in some areas based on the local labor market, but overall prices will continue to stabilize and improve in the second half of 2011. There's still going to be a lot of foreclosures, but there's also a backlog of purchasers waiting in the wings. There's still a lot of people that think that the bottom hasn't hit. Well, most of those people are wrong, but it's okay because by the end of the year or summertime, you know, summertime is very, very hot for the real estate market. Typically, those investors come out of the woodwork and start buying property up again. In the second quarter, we'll show the beginning of the stabilization for foreclosure levels. And then home buyers will also see rates and home prices inch up higher by the end of 2011. Promise won't stay. Okay, so now let's talk about home loan rates and where they're going to be going. They're going to gradually inch higher in 2011, but there are two factors that could help home loan rates. One of them is if the Fed is successful or unsuccessful with the QE2, the easing, the monetary policy that they imposed in late 2010. But it really doesn't seem like it because of the fact that, you know, we also got to pay attention to what's happening in Europe and, you know, foreign governments purchasing our U.S. bonds or our mortgage-backed securities.
Is the QE2 that, is that when they print a lot of money?
Yes.
Is that the QE? Okay.
That's what they're doing right now, is printing a lot of money. Okay, so let's go to, well, let's stay here. So basically, remember I showed you that chart of the S&P 500? Home loan rates are gonna get worse or get higher, but they're not gonna it's not gonna happen in a straight line. Like, you're not gonna be able to predict where home loan rates are gonna be the following month or the month after that, because they're gonna go up and down. But the trend is gonna be that they're going up anyway. By the end of 2011, you'll see home loan rates somewhere between 5 and 5.5% for a 30-year fixed mortgage, maybe paying a half a point.
That's great. That's still good.
That's still awesome, yes. But see, 2011 is still going to be, that's a good point that you bring up. 2011 is still going to be the best year on record, behind 2009 and 2010.
For interest rate.
Correct. In 2010, we saw the best interest rates that we saw in the past 75 years, since before even the Great Depression.